I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now on Bootstrapping, I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world.
Welcome back to Tasty Live, a special in-studio edition of Bootstrapping, and with special guest with JJ Kinahan, CEO of IG North America, the president of Tasty Trade, Tasty Live, an old acquaintance and friend of mine from various trading and financial circles here in Chicago and New York. And it's nice to see you again, sir.
Good to have you in person,
You're looking well. Nice to be here. Nice to be here. So before we get into the businesses and the markets and all the rest of it, you said something interesting when we were setting up, which is that the younger the people are, the more willing they are to blindly own things, that they're not so fearful of the sell-offs. And I say that as somebody who's been more active trading because primarily of my work with the overtime boys every day here. So I've been much more active in terms of my own trading account the last year, really more active than I've ever been.
Good.
But I tend to be much more
conservative.
And I'm more skeptical. I'm like, there's no way that the NASDAQ can keep doing this, or there's no way that pick a stock can keep going. There's no way some of these big names or indexes on the equity side can keep going up. And every time I hold that opinion, I'm wrong.
Well, I think that every generation has their sentinel moment, if you will. For me, I started in the pit, I think I was 23 or 24 when the 87 crash happened. At a very young age, I learned, wow, this can be really, really bad. Then you had the tech bubble in the early 2000s. For this generation, maybe it's COVID, but we bounced back so quickly from that one that it didn't seem like there was that same level of prolonged pain. And so I think what ends up happening, actually I'm happy when younger people take some risk. I think, one of the whole points of everything we do, and if you go on the Bad Trader app, one of the things we do on Bad Trader is we try to teach younger people how to take risk. And, it's always interesting to me, and I find this a conundrum. Wall Street's always told you take risk when you're young, yet when people take risk, they tell them they're wrong. So it's a silly, silly thing. People should learn how to take smart risk, not reckless risk, but smart risk. But I think what also happens is maybe the respect for the market when you're young doesn't exist quite as much. A, you probably don't have as much to lose. B, you have events like last Monday where VIX did go from 20 to 60. You don't often see that, but it came down, and as you and I speak, it's trading 17 and a half, and we're 8 trading days later. So it's crazy.
But you said to me you've never seen a market so resilient as this.
It really is unbelievable. What it shows is the U.S. stocks are still the best game in town. There really isn't anything else competing with your money right now, particularly with all the rate cut talk going on. For a while, bonds, obviously fixed income in general, came back. But I think right now, as people look around, they're like, where else should I put my money? If I can buy a stock, maybe sell some calls against it, and get a stock that's yielding 3 to 5%, seems like a pretty good investment looking at everything else that's going on right now in the world.
You've been around
forever.
For a minute. Both on the floor yourself at TD. I guess Schwab as well. Was Schwab a part of that?
Schwab, a small part. Thinkorswim, TD, Schwab, and now here.
And now here. What is, in your opinion, what are the biggest levers that influence customer engagement for the existing customer and the creation of new customers?
Sure. One word: education. There's no question about it. People are in search of how do I learn more about the market? How do I just got done talking about risk. How do I understand risk? How do I understand to look for certain things in the market? And one of the things that I think, if you look at what we do on Tasty Live every day, if you look at what Tom and Scott have built a couple of different times, one of the things they've done is really press the edges on content and education. Not in a bad way. What they've said to people is, we're going to challenge you to be smarter. We want you to come and embrace this. Why? Because the more you understand, the better this starts to become. Again, I always tell people, you don't have to use, maybe futures you're just uncomfortable, but you should know how they work, because that's an arrow in your quiver, and you're never sure when you might want to shoot that arrow. But You want to have shot at the arrow a couple of times before you actually need it. And so I think one of the things that we've really always tried to do is say, please understand risk, please understand the markets, because as you see, as you're more active and in your career, you've seen it a million times, everything's related to one another. If you think about the fact, most, people are suddenly hearing there was a yen trade last Monday that made everything go crazy. They're like, what the hell? But what it is every financial product is related to other financial products. So, it's like when we were kids on the cartoons, they used to say, the more you know. Well, really, the more you know, the better. And the ease, I won't say easier it becomes to figure things out, but the less confusing things are, and you start to see opportunities with clarity, which I think is one of the best things that can happen to you.
And when you look at sort of the nature of the educational resources today, compared to 5 years ago, 10 years ago, 15 years ago, particularly with I won't even cite all the obvious things that have changed, but how much better is it? How much more accessible is it? And how much potential growth is there, do you think? How many new customers can be created?
Well, so I'll start
because of it.
Yeah, how it's grown. So when I started when I left the trading floor and I came to Thinkorswim, how I started was flying city to city doing seminars. I used to do 15 seminars a month. And you would start at 9, you'd go till 3, you'd talk about the markets, you'd do platform demos. We'd usually do them in sets of 3. So maybe you'd go to Milwaukee, Kansas City, St. Louis. The next week you'd go to San Francisco, LA, Sacramento. And it was hand-to-hand combat, but it wasn't scalable. The difference now is it's so scalable that people can get the information anytime they want, and the quality is unbelievable. What the team does here every single day in terms of quality is absolutely amazing. Here is my fear for it though, Dylan. With the TikToking of America, people's attention spans are shorter. How do you engage somebody on how a vertical spread works in 30 seconds? It's impossible. You have to get their attention and then get them to actually spend a little bit of time, be it video, be it reading something, to get them to truly understand it. So I think the challenge has changed significantly in the content game. The challenge used to be how do I scale it. Now the challenge is how do I hold your attention long enough so that you actually get educated on what's going on here. And as you and I both know, people's attention span is just so much shorter, but you really have to dig in a little bit to understand this.
Have you considered the Margot Robbie technique?
What's that?
With the Big Short, where they had Margot Robbie in the bathtub while they're describing the swaps. I mean, listen, everything needs to be up for discussion.
It works.
If you were to look at, you talk about education. I'll just speak for myself. Obviously, I've been around this topic as much as anybody the last 25 years. But I have not been actively engaged holding positions every day that change day to day, week to week on all the domains in the bond, I won't say all the domains, but more of the domains than I have historically.
Right.
In the bond, in oil, in some of the currencies, certainly the dollar-euro relationship, and then obviously in equities. And nothing teaches more than participation. And so I feel like there's a huge difference between understanding the content or understanding the methodology or intellectually understanding it and actually, or even paper trading it honestly, and actually engaging with it, which seems to be the final hurdle, which I'm kind of going two places, because there's the philosophical component of this, but you're also the CG or the CEO of IG North America with a mandate to create a bigger business.
Yeah.
And so in order to create a bigger business, you need actual human beings, either existing customers to trade more or new customers to trade. And that's the final, it's one thing to come up the educational curve, and it's another thing to go from the educational curve to a funded account. And it's another thing to go from educational curve to a funded account that's active.
Absolutely. You're saying our challenge every single day, right? How do we get people interested in coming to our firm among our competitors? I think that content helps. Our platform, significant. Our customer service out there.
And that strikes me, and I could be wrong, that's actually the easiest of the three things.
It is. How do I get somebody then to fund an account after they've opened an account? Again, very difficult. It's always amazing to me that people spend time funding opening an account, going through the paperwork, and then they don't want to put the money in. So again, Now, if we've done those 2 steps, which are hard, how do we get them to actually make a trade? The key to your point is to get somebody from none to one. Make that first trade. And I think you're hitting everything right on the head, Dylan, in terms of there is nothing like having skin in the game. As I tell people, listen, I'm an amazing paper trader. Why? Because something could be $20,000 against me. I won't flinch. In reality,
And you could take massive risks.
Yeah. In reality, if I'm down $20 on a day, I hit everyone I ever met. So, that's just being a trader, and that's being competitive and always wanting to win. But with that said, the lesson I always tell people, try one contract, one lot vertical spread. Maybe you can make $35 and lose $65 with a high probability of making the 35. There will be enough pain and suffering in that one contract. You will learn so much about yourself, what your risk tolerance is, and everything else. The easiest thing in the world to do is to become a bigger trader. But you got to get there. And one of the huge mistakes I see retail make all the time, starting too big. And what happens when you start too big? How many times has somebody had a position on you said, oh my God, I sold the low, they screwed me. I bought the high, they screwed me. Well, the reason you feel like you got screwed is because usually your risk is too big and you can't handle it. And knowing, I think most of us start with, what can I lose on a trade? What's my maximum risk? Now, what am I comfortable receiving for taking that risk? What are my probabilities of doing so? That's, at the end of the day, everything you need to know about trading. Now, the point being, I'll use Saz. Saz takes some big risk. I would not sleep if I took the risks. I accept the fact he'll take more risk than I will. It doesn't bother me in the least bit. I know the risk I take on my trades. I'm very comfortable. I'm probably going to make pretty good decisions, because they're all within an area I'm very comfortable taking the risk. I already know what the worst case scenario is. And when you lay out worst case scenario beforehand, it makes it easier. Think about when you said you become more active. So think about when you first became more active. You'd put on a trade, what was probably the first thing you said to yourself? Look what I can make. Now that you get more experience, what's the first thing you say to yourself? Okay, what can I lose? Is this a reasonable loss? If this all hell breaks loose. That mind shift is the biggest one people can make.
Do you think it's, as a businessman, do you think it's easier to grow the business by taking the existing customer base and making them more active? Making them even sounds manipulative. Allowing them, or sort of educating them in a way that they feel comfortable being more active.
It's not easy to say, and I understand what you're trying to ask.
But educating them in a way that they feel comfortable with more active. So I'm going to go from stocks, like you talk about getting into futures, or maybe you come over and have a bond opinion, or maybe you come over and you have an oil opinion or a corn opinion or whatever. With that, all the challenges associated with that, or to manufacture an entirely new customer.
Well, any business, you say your current customer is always worth more to you. It's hard to replace a current customer. You have to work 10 times as hard to get a new customer.
To make a new...
Yeah, so obviously you always want your current customers for whatever it may be.
For any business.
For any business. It's just not in our business. Any business, a current customer. Now, what's always interesting to me, so we have a certain threshold. When a customer leaves, one of the people on our team is in charge of calling them to find out why they left, or why they withdrew a money over a certain amount of money. Often it's people who leave a small amount of money in their account and they'll say, you know what, I'll be back. I'm in real estate. I need this money for a closing. I have this going on. I'll be back to you guys in 6 months. Okay, great. I love that. Nothing upsets me more than I had a bad experience. I want to know every detail. And myself or Scott will probably reach out to the person, tell us why, what can we do better?
So let's talk about the bad experiences for a second.
Yeah.
So there's the bad experience on the service side, which is generally, I think, not an issue.
It's been pretty small.
I mean, it's not the reason for this company that this company. I've been around the Tasty for more than a decade. It doesn't have a service problem. If anything, it's an industry standard. I've never seen anything like the level of service at this company. The bad experience is I thought I was going to make a lot of money and I lost money.
Yep.
I mean that's just for everybody, and a huge percentage of people lose money.
It's It's hard. It's like everything else. It's hard to get yourself to that point where you're making money consistently, and it takes a little bit of work on the education side.
And so let's talk. We're not going to solve that in this discussion, but I'm interested in terms of your opinion, in terms of educating someone who is active, who is managing their risk. They're like, oh, my size is the issue. I'm staying small enough that I can so I can play another day. Right. As I got to that, but I'm still not. I still feel like I lose more than I win. And I'd like to move to the point where I'm among the, 10, 20, 30%, 40% that make more than they lose. And I'm interested in your sort of opinion on both of them. What's the difference between those two groups? And how much of that can be solved through education and time?
I think most of it can be solved through education and time. I think you have to start with realistic expectations, and that's not where most people begin with. Most people read about the Warren Buffetts of the world or somebody like that, and they're like, well, I should be doing that. Well, you know what? I watched Michael Jordan play. I never once expected to play like him. And so I think that, again, what are your true expectations? The market has turned on average on the S&P 500 8% over the last 50 years. Okay, let's start with trying to get to there. Let's meet the market. And then if you start doing things right, if you start understanding how to, I used a quick example earlier of a quality stock, you write a call, get some dividends, you're going to beat the market. Okay, mathematically it tells you that's going to happen. So a lot of it is about setting proper expectations up front and being willing to work your way into it and go slowly but surely. And again, you're not going to put all your money into trading. That's probably not the smartest idea for most people. Maybe if you're young, you only have a few $1,000s, sure. But as you get older, you start to accumulate some money. You want to have some safe money, I'll call it too, that's invested in some very conservative products. And so again, I think that you can definitely get there over time. A lot of it goes to also to understanding the relationships between the products, Don. And that really helps you to get to that point.
Now, when you say relationships, I mean, I want to go into that a little bit, because it's like there's the relationships between the products, and then there's another way to say probably the same thing, which is the way the products relate to each other.
Yeah.
Right? Which I'm sure is
the same thing.
Which is the same thing, right? And so because we talk about this on Overtime a lot with Chris and Ilya, it's one thing to have a point of view. Oil's trading in a range. When it pops off, it's been a good bet to bring it back in. You mentioned that you trade corn in a range in that same way. I've had good fortune with TLT, bad fortune with the NASDAQ, whatever it may be. It's one thing to have a correct point of view. The odds that volatility is going to contract after last Monday are high. The odds that oil is going to go lower after this recent run-up on Israeli fears are high. It's another thing to be able to structure the right instrument with the right relationships in the right time. And all of us, whether you're relatively inexperienced, as I still am, with only really a year active, even with decades in sort of constant cacophony of it, or deeply experienced like you or Tom or Scott or whoever, so much of the outcome is a function not of the opinion at all, but of the relationship or the strategy that is laid in against it. And I'm interested in even how you begin to make that. Tasty Trade would say sell volatility 45 days out. And all of us do that sometimes, but no one does that all the time.
Right.
And so I'm interested in how you sort of
I
approach
think that's a really good point. When I used to do a lot of education, I'd always be like, putting on a position is easy, anyone can do it. It's the next stuff that's really hard.
Yeah.
Number one, it's why I really encourage people to start with spreads. Define it right up front. It makes it just so much fruit and easier. And the other point, on Tasty, we talk a lot about selling things. I mean, I do occasionally, I'll admit, I probably buy things also more than anybody else here. I'll buy spreads, not just sell them. And
we buy them on Overtime.
Yeah.
Don't you worry.
Yeah.
You come hang out with us.
I know. Well, Chris, I know.
You can hang out with Vecchio. We'll buy all kinds of things.
Chris,
Ilya too.
Chris definitely. I've had just more experience with Chris on stuff, and so again, I think that's great. There's two ways to trade everything, but that 100% helps. But to your point, it's why you go slow. It's small. But the other thing is, if I have 10, we'll say, contracts to buy or sell, I'm doing one or two at a time.
Right.
because I realize that I'm probably going to be wrong on some. My first 4 contracts
On the way in and on the way out?
on the way in and on the way out, because I'm probably going to be wrong at the beginning. But I'm okay with it because my average price is going to be good both ways. And so I think that that's also, people are taught to think all or none. They're not taught to think partial. You talk to anybody who's ever traded professionally for a living, they're partial, 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 partial. I used to always joke, it's why so many traders get divorced, because they think partial.
As opposed to total.
Yeah, well, I will say that with after almost 36 years of marriage, talk about somebody making a bad trade, talk to my wife. But anyway, all that said,
That's not true.
but again, I think partials are really the way to think.
To manage your way through it. Okay, so then let's play the parlor game, shall we? The market
Please.
is where it is. The Fed is into a rate cutting. They're on the precipice of a rate cutting cycle. The statistics would tell us that that the market does great until the rate cuts begin. Once the rate cuts begin, the market's not so great.
By the rumor, sell the news.
Exactly. So we've got, we'll call it 4 months left in the year. September's sort of sneaking its way in here. Is the best behind us? I mean, we've had an incredible year on the equity side already. Is the best behind us is the first question for equities.
I don't know that the best is behind us. I think we have one more really strong run to the upside.
Is the bond the best trade out there because of its narrative flexibility?
I would say that in the shorter term, I still think equities are. For maybe the last quarter of the year, the bonds might be. But for a lot of people who don't understand how bonds actually work, please do a little homework.
Is oil trading as a function of the economy, geopolitics, or OPEC?
Yes. That one's a little bit different. That's the toughest of the questions so far. I will say the oil is trading as a function of geopolitical context and currency.
Second question on oil. If the economy slows and there is are rate cuts for a bad reason, if you will, in other words, if it's rate cuts because of a slower than expected economy, is that oil negative?
No, oil's not negative, but I think that that's you just brought up to me the most important point about rate cuts that everyone overlooks. You don't cut rates because the economy's doing so great.
Unless you're just solve for inflation, unless it's the ultimate Goldilocks, rate cuts for a good reason. Come on.
Yeah, but again,
very rare.
If I look at food and energy, I don't think the inflation's as solved as people would like it.
So in other words, rate cuts are an indication of a weakening of an economy that is in decline.
I think it's more about jobs than it is about anything else. If you look at food and energy, again, the two areas, sorry to change the subject here.
No.
Food and insurance. I mean, if you bought any insurance on your house, your car, anything, it's crazy.
It's a face burner.
And food is not coming down. I'm sorry.
Food is an outrage.
Food is an outrage.
I can't even buy a block of cheese without having to check my bank account.
And so it's really unbelievable to me that we're saying inflation is coming down so fast, which in many areas I will give it is. But the one essential to live life and the other one that most of us are going to need are not coming down.
Best trade out there, in your opinion, right now?
The best trade out there right now, I would say, is still the equity market in the U.S. for at least rate cut time.
Until the first rate cut. From now until the first rate cut.
And actually, probably till the second rate cut. And the reason I say that is because so many people are saying there's going to be a 50 basis point rate cut. I disagree only because that doesn't play with this Fed. He's a very conservative. I'm going to look at the numbers. I'm going to go
that's
slowly.
A real alarm if he runs 50. That's a total disaster, basically, if he's got to run 50.
Well,
or he's going to freak out.
The probabilities were there.
I saw
Heavyweight last week.
Yeah.
They've come off quite a bit. So I still think that if he only does 25 basis point, which I believe they will, that there will be another expectation of a 25 basis point shortly thereafter, which will keep the market higher.
J.J. Kinahan. He's the big boss, CEO, IG North America, President, Tasty Trade, Tasty Live. I am Dylan Ratigan. You are watching Bootstrapping. More Tasty Live after this.